Well, welcome to part two of this particular section. We're talking about the Fibonacci. Let's go back to the beginning. So this is what we're talking about, the pullback and retest strategy. And we said the objective is to wait for a retest to confirm strength. And the tools we're using presently, we want to work with the Fibonacci retracement. So how do we work with Fibonacci retracement? We want to know your highs and your lows. The market has created what? A lower high right here with a what? A lower low. Now the market has put in what? A lower um a lower high right here, right? So now what you're anticipating is this. You want to see the market switch, bring you because this is a key low. This is a key low. You want to see the market what come to a peak level where the market can keep retracing to the upside because you're anticipating a change in momentum, right? Because you've probably seen this level of support right here. Yeah. So you're anticipating the market should not break this level of support, which it did not. At some point, it came here. But let's go back to what to do. So this is it, right? And this is a level of support right here. And you want to use your Fibonacci too. You want to see the market works from the downside to the upside and extend to the future. You can see that the market fell to our key zones, which is just right here, where we have all of this. So I'm just going to zoom in on all of this. Okay, so I'm going to zoom in on all of this, and you want to see the market react. And if you extend this to the future, you can see how the market reacted and what went out from our Fibonacci 2. So if you were to take this trade from this word kilo to this high, so you want to see, you want to place uh, your entry like this. You want to place your buy limit here and extend to this side. So this is how you'd have made profit from it. So this is the strategy, and this is how we work with the Fibonacci 2. Okay, this is how we work with the Fibonacci. So now let's look at it again. We said the pullback and the retest strategy concept is what to enter after a breakout or a trend continuation. Now let's see how it works with the continuation. Let's assume the market is continuing that particular trend. How do we do this? We've talked about the Fibonacci 2. Let's still talk about it continuing the trend. We talked about how it changed from what bearish to what bullish. Now let's see how we can continue this trend. Let's assume we want to continue this trend. Yeah, so let's take this guy out. And let's take this out. We already have our key levels. Well, let's assume we missed out on this setup. Well, how do we enter? Now the market has created a high. We want to see the market create what? Now this is what our new low, our new swing low. So you want to mark this up later. So this guy and this guy is where now you use your Fibonacci to continue this market. So you want to take your level 2 and put on this level. When you put it here, you can extend. It's on the same level. Now you can see that you have what better entries because now you have it at what the 0% right here. So please, can you turn off your camera if your camera is on? So just for all right, thank you very much. So now you can see at this level because now this is our previous what entry level. This place here to this place. You can see where the market was hesitated at this peak level and rally back down, but it not come into this level completely. This it becomes a new 0%. You can see the continuation of the trend, right? You can see the market continue. We have even better ones. Let me see if I can get something good to help us here. This has been an option for a while. Yeah, we can use this level as a case study. This one here, this swing low, and this swing higher. So what we want to do is just put this like this. You can see the market at some point in time fell back down into that level, into a flip level, and that place you want to wait for it to was bad. Going to wait for it to buy. This can just below that low and extend into the future. So now, this is how we do it. This is how it is. Now you can see after the market crossed the first half, this is your worst peak extension. So you can anticipate further moves here, but it's not guaranteed because you don't know what's going to happen in the forex space. You don't know what price is going to do. So it's always good to scale in. So whenever you're in profit, you want to like lock in your profit by getting break even just like see what happened and the market rallied down. So remember, price is fractal in nature. Not because this is on a daily time frame, it won't happen. It can happen on a 1 minute chart, 15, 5 minutes chart, 15 minutes chart. Um, Sorry, I'm going to answer every other question, like at the end of this particular section. We're trying to break this uh trying to break this class by 35 minutes, 35 minutes, so everybody can be able to absorb it, like without it being too extended. So we've been able to talk about the Q2. Now let's talk about break and retest zone. Let's talk about candlestick confirmation. We've talked about candlestick confirmations before. Now we're going to try and do something again with candlestick confirmation. In a break and a retest strategy, candlestick confirmation is key. You want to see some reactions, candlestick like this. You want to see something like this. You want to see something like morning, your morning star and your evening star. That's a triple candlestick reversal pattern. You want to see those kind of things there. You want to see something like this. Okay, you want to see your pin bar, your shooting star. These are the things you want to see. Let's take this color and turn this guy to green. Okay, let's give us here. You want to see things like this, right? You want to see another one like this. Let's try and bring this guy closer. All right, just we want to do something like this too. All right, so this is how you want to see something like this. You want to see this guy, right? So what kind of candlestick pattern is this? What kind of candlestick pattern is this? We already know these are morning star. And you want to see this guy hitting a level of what support. So this is actually a very, very good candlestick. We have other ones. We have engulfing candles. You understand? We have tweezer bottoms. I'm talking in an uptrending scenario right now. In an uptrending scenario. So we have a tweezer bottom where you want to see the market doing something like this. But I'm going to use this as a case study for an engulfing candle on the tweezer bottom. So, and I'm going to show you guys the difference. The difference right now is this. This is what an engulfing candle, right? This is an engulfing candle. The market has this one, it shows bullish strength and it's engulfing what's the sellers in the market, right? And this particular one now, we want to turn this to a tweezer bottom. We want to see the market close together. Now you're going to see this low level and this level. We want to see them at the same spot. When you're able to see them at the same spot, it means the market closed evenly, and this can be seen as a tweezer bottom. I've taught us all of this, so I want us to go back. And whenever you see this in markets, at a level of support, remember, this is what we're following. When you see candlestick confirmation, break and retest zones, right? When you see it as a level of support and resistance, then you want to take advantage of this. So let's go back. This always shows at the end of what a trend. Maybe the market is getting weak. You see them. So let's try and see if we can spot them around here and see how effective they are. So right now you can see this particular one. You can see how this candle went aggressive. This is an engulfing candle that has engulfed all of the sellers at this level. So it shows strong buying interest. So if you're to buy, what you're expecting to do is buy when the market pulls back to another level of what demand. Okay, we can see it's happening here also. We can see this one now. This is what we call a morning star. You can see this morning star happening right here. Let me see. Let me zoom in. Then I'll use my highlighter. You can see this morning star, just like I've drawn. All right, so you can see other ones like this. You can see this one. This is a tweezer button. This one right here. See the close, the candle close, they're equal. You understand? So these are things you want to like spot out for. You want to look out for. You can see it's continuous, endless even. So look at this. Why chose these two to draw for you guys because these two always happen. This one, they always happen, and it's always good to see this kind, you know. There are some advanced ones when you move to the intermediate class with the taught, but these ones are always they're common. You want to see them, they are like gold, you understand? So you want to spot out for all of these candlestick reversal patterns right here. So what else do you want to look out for? You also want to look out for this break and retest zones, like what we did earlier. Let's assume, you know, run our trend line so far. The trend line extend to the future. You want to extend to the future. You want to take it. You want to take it, and this is what a break and a retest. The market has retested this level at this place. So once you retest this level, what you need to do is to short, just like we talked about the other time. The break, the retest, the sell. I think I did this several in previous classes where I used gold as our case study. So let's move to the next one. Let's see how we can move to the next one. Okay. We have range bound strategy. The concept was to buy low, sell high inside of a well-defined range. So let's look for a range that we can buy and sell from. Uh, Trade between support and resistance level. You can use your oscillator, candlestick reversal patterns like we just talked about. So now let's look for a range in market and see how we can buy low and sell high. Okay, let's look for a ranging market. What can we spot a ranging market here? Trying to get a ranging market for us. This particular pair is what I call like it's a trending market. I like this asset. It's always trending. Hardly would you see a range, but let's go to another asset class to find out the range. Uh, the euro dollar and the GBP British pounds do justice to that. Okay, let's see the euro dollar. Let's see to get to spot some range here. Um, the range can be in two forms. It could be the smooth range or the horizontal range. So I'm just going to do the most recent range form I saw. Okay. So now this is a range for me. This level right here and this level before the breakout. This is a range. You can see the market that was constantly creating words when it was moving. So at this point in time, you could equally have what bought here, sold here, bought here, sold here, sold here, just down here. Then you can see the breakout what and the market is what coming to this level of what supply right now. So this is a range strategy. Just looking for something much more simple, but this one is giving us a much complex one. This is also a range strategy right here. So you want to see the market between support and resistance. This is our resistance. This is what our support right down here. Our support here. You can see the market is just creating these levels. So what's creating what highs and lows inside of this zone before it finally what broke out and what went lower. So you can equally have been buying up and down, up and down. You can see that it was at this level because the level of supply and the market would short. So in this kind of strategy, what do you want to look out for? You want to trade between supply and support and resistance. You want to use your oscillator. Also, you want to use your candlestick reversal patterns. All right, so number 6, the smart money concept. Let me just take this out so it's staying on screen. Number 6, the smart money concept. So when you talk about the smart money concept, this concept follows the footprints of good players like the banks, the hedge funds. Also, you want to identify the liquidity grab, order blocks, imbalance zones. So this concept, this is how we're going to work with it. You want to spot out institutional movement. You want to spot out uh, the bands, what they are doing. Let me see what they're doing. This kind of setup. So let's see what we can do. Okay, let's see what we can do. Let's see what we can do. Now let's take all of these things out. Let's ignore them. Let's identify the liquidity graph. Let's identify other blocks. Let's identify imbalance zones. So let's step into the NAS 100. Let's get to most recent price action and see. Yeah, let's move to most recent price action and see how we can spot this out. Now, this is an institutional level. Yeah, when we see liquidity graph, where we see their equal highs, whenever you see an equal high, it means that there's either the market have bought or sold from there. So if the market is like this, an equal high is also something like this, right? It's what an M pattern, which is what a double top. So it means that people at some point in time they've what sold at this point and also had sold at this point. So this level is level of liquidity. So once you see this, market is likely to do something like attract, take that level and what sell back down. Market is always attracted to liquidity. So now in this case scenario, you want to see you see this level, you see this high, you see this high. This is what liquidity. Remember, what are we looking out for? You want to spot liquidity, pools, graph. Now you want to spot out other blocks also. Yeah. But before we do that, let's mark out our structures. You want to see the high, the low. This high should be red. So let's just put red so we don't recognize. So now we've seen liquidity. And what else did you tell us to do? You want to spot out other blocks, imbalance zones, imbalance. So where's the level of imbalance, right? This level, before this candle came, this level was what's naked, imbalance, imbalance, because they are not being filled. Look at this level, because that's not being filled. Yeah, this level two has not been filled. So there's an imbalance in the market. That's a fair value gap. You want to spot out this zone. So now with this happening, what you want to see is the market words take out all of these levels. And we can see, let's go back again. You want to mark out your order block. You choose liquidity, above highs and below lows, order block, fair value gaps. Example, price with liquidity above a recent high, then forms a bearish order block, entry short. So let's see if we can get something like that. So the market has done what at this point in time, seen liquidity above, right? We have imbalances here, and this level is our level of what? This is our order block. This level here. This is our order block. Just send this to the picture. Let me see if I can take this transparency. All right, so let's take this guy in a little bit. Let's see. Yeah, that's our order block. Let's extend to the future. Let's go to the daily time frame and see if we can have better. Okay. All right, so the daily time frame shows us this level as our order block. This green candle, the last candle before this impulsive move happened. So we want to see this. This is our order block. So let's go back to the forearm. And that's how you get your confirmation. Now we can see that there's imbalance here, there's what liquidity here, and what did you see the market do? The market just like, after creating this low, took our order block. This is our order block. So let me mark it out. This is our order block. Our order the top. So that's our OB. Order block, you want to see the market fall in that level. Once the market fell there, you want to buy at that level and extend to the nearest level above liquidity. So you want to buy and put this under here and you see the market come to this level. Remember, this candle has not been formed. The market is just reacting there. So the market came and what started doing there. And with this, you have run to a 1 to 5 ratio in your profit target. The market has taken liquidity that's hit towards these levels on a higher time frame, which is the daily, and you can see the market did a reversal. And you can also still enter with your Fibonacci 2 and send with this setup. You can see the market has been running up since then. So guys, the strength of this, yeah, that aligns with how institution actually trades. The weakness is that it requires deeper understanding of price action. It's SMC is just price action. It's institutional trading. So I don't why people don't really like it is because you have to have deeper understanding. It's more like professional setup for it's more like a setup, a strategy for professionals, you understand? So now, three, let's check our document. I had something worked on. So let me see if I can get this done. I'll bring to you guys. I'm going to share my WPS screen to you guys now. And I hope I saved it. That's just it. I hope I saved it. I don't think I saved it. I didn't save it. I did the contracts. Okay. I did the contracts. I did not save it. Apologies. Apologies. Let me see. I thought I saved it. I worked. After doing all of those work for this stuff, I did not save it. So let me try and get it done. But whilst I'm trying to get it done, you guys can, since you can hear me, ask your questions, please. Ask your questions with me. Any question, guys? Some people asked questions earlier, so please, I know I could not attend to it, but now you can ask your questions before we get into this.
Okay, sir, please, I wanted to ask how we can, I know you showed us, well, it wasn't really clear to me how we can use Fibonacci tool for continuation pattern.
Yes, that's my question. So
Fibonacci tool for continuation pattern.
Sorry, no, not for continuation. I don't use it for continuation, for reversal.
Reversal, okay.
So maybe you can just explain it too.
Okay. Okay, Mr. Zoma, that was the question you wanted to ask, right?
Yes.
Okay. Going to attend to that too.
And please, when using it, because my own Fibonacci tool is kind of confusing to me. Mine does not have that 100%, 60%, and if I should use it, anytime I'm using it, it just like cover my whole screen. So I am confused why using it. You can just touch on that.
I will explain that to you guys. So let me share this particular screen with you people. So this is number 3 I was going to show you guys. Now you can see on this screen. You can see the trend following strategy. We have the scalping strategy, swing position. We have trend following strategy. So in trend following strategy, you don't want to scalp, you want to intraday trade, you want to swing, you want to position. In the counter trending strategy, you don't want to watch scalp, you want to like trade, swing, position the breakouts, you want to like scalp. In the intraday trading, you want to like intraday for the breakout strategy. You also want to swing, but you don't want to hold long positions, right? You can swing like a day or two, but you don't want to hold long positions. You know, the pullback and retest, you can scalp, you can intertrade, you can swing trade, you can also hold long positions. In the range bounce strategy, you do not want to scalp. I mean, you want to scalp, you want to day trade, but you don't want to swing and you don't want to hold long positions. The smart money concept doesn't give you opportunity to scalp. It may give you intraday trading positions like day trading, long term trading, swing trading, and position holding. So I'm going to send this. This is just like a rough walk I just did right now. I did a better job earlier. I just did not know I did not save before I switched up my system. So and there is no automated saving stuff. So yeah, stop there. I'm going to try and attend to the questions. My God. Okay. Before I come to your question, number 4, choosing the right strategy for you. your schedule. You know, you want to understand your schedule. You do not have time to watch chat all day. Or do you have time to watch chat all day? You need to know the kind of person you are, your job, you know, then you want to know your risk tolerance. Do you prefer quick profit or long-term gains? Your psychology. Are you patient? Do you handle losses well? And as a beginner, it's best to what master one strategy at a time. For example, start with a break and retest on H1 and H4, but test 50 trades before going live. Okay. Then our final note here, strategy alone is not enough. A great strategy without psychology and risk control equals failure. Always track your trades. A journal, you know, your exits, your entry, your emotions, your outcomes. Use a demo account to test every strategy first. Then we have an assignment here. So you guys will choose two strategies from the list, backtest 20 trades from each trading strategy and using trading view replay mode. Then track your win rate and emotional response. Write down which suits your personality and why it suits your personality. So I'll be anticipating all of this later on. We're having lesser students right now. We've dropped to just 7 people. 7 people. So our life video is another question. So all right, so let me go back and then answer your questions. So I'm not going to use a chart. I'm just going to use this. Okay. This is the market predicting series of highs in the uptrend markets. The markets is time for some point in time to saturate hours and the market changes again. The market changes again. All right, so we have this guy. How do I trade this market? If I want to trade it, I'm trading with my feed. Feed high, low to high. Yeah. At some point in time, yeah, from this level, usually this level, the price will fall back in and what we tag in and rally up and keep going like this. Now it does not look significant. It looks like because it's noisy, but the truth is that sorry, the truth is that we have what we call internal structures. Those internal structures are what gives the advantage. So internal structures, we have things like this. That's what we tag into this position and move your way. Now remember, this is not fixed. Let me do it very well. So this is likely what you see. Markets will come and tag you in and keep moving. This is likely what you see. Or it's your internal structures how to do that. On the smooth, on your actual higher price time frame, this will be seen as your smooth structures. So let's do this. Okay, so this becomes a new high. Now the reversal, how do you want to do reversal? You seem to change your character. You use this shift in structure. Now you want to split this and this. This becomes your Muslim structure, this guy and this guy. So what you're expecting is you're expecting this market to come to one level and sell from. So you have anticipated what an area of interest around here. You now use your feet to from up to down, extend, and wait for the markets to come to that level. Once it ties it into that level, like this, and once it ties it into that level, to sell, to keep selling till it's exhausted. Then when it does another change again, you want to see the market take out a new or the previous high, then see the market do something like this, get in that place. You want to just take your feet and put it like this, and when you extend, market should fall into that level at some point in time. So and keep buying. So that's how it is. Doesn't mean Doesn't mean it must finish the feed. It might just stop halfway. Understand? Doesn't even have to respect the feed sometimes. All you need to do is look for another place that will take the feed, that will respect the feed, and place your trade if you're going to be using Fibonacci. You just need to master the structure like this. It's how it is. I think I've done a video on Fibonacci. I feel I have. Okay, see another range strategy here. You can see these levels. All of them are what's just ranging. Arranging. It's a range strategy. Market zone. So you can buy in between all of these guys before the actual breakouts. So all you guys need, you need a lot of practice. So this is the reversal. If it's in a downtrending market, yeah, what I want to look out for is maybe something like this, yeah, and extend to the future. Now we can see the market has come to this level with hesitation. So we don't know if it's going to keep going or it's going to keep going down after now. You understand? So that's how it is. All you need to do is just change the position of the feed. Look for the high, look for the one that has broken structure, either to the upside or downside, and follow it like that. That's how it is. So that's the end of this particular topic, and I hope you guys are able to follow up with this assignment and create an edge. This video is going to be available. So a lot of people have been asking, I apologize that I've not been able to make it available. But this video is going to be available as a link also on my YouTube. So you can also watch this by reposting this on my YouTube too. Then you can also see some structures there, some things you guys want to learn. Even after with the link that has been provided on the platform, you can go over there and see watch some much more different way of teaching it, you understand, than the ones you've seen. So you can have better understanding. You cannot have like two different angles to go about all of these things. So I'm going to drop this link on the group. Also, the link to the YouTube is very simple. It's just my name, the Fx Chieftain, the one you're seeing on the screen right now, the Fx Chieftain. That's it. So once you check it out on YouTube, you see all of these videos there. I will post in this video. I'm going to send it to the link to the group too. So you guys can take advantage of these videos and watch any other video there that you want better understanding on. So I really appreciate you guys. Thank you for coming up. Thank you for showing up in the first lecture in the month of June. If you have any other question, please send to my DM. I don't also ask you, just send to my DM. I'll follow up with it. So this class is ended, and I'll see you guys later. Thank you so much for coming up. Very, very much appreciated.